Each of those questions you posed have been asked about micro approach from start. For numerous years now they've followed this approach. Those who have been dubious of Michael Saylor's emphasis on adhering to this Bitcoin standard would have stated, well, you're paying a premium, hence you should short the company. Over the past few years, there have been numerous well-known short seller reports, implying, naturally, the stock has been a spectacular performer. One of the things investors are lacking, as MicroStrategy is clearly implementing, is a rather aggressive treasury strategy. Stated differently, they are typing capital management around their Bitcoin position using accessible funds and liquidity, doing some opportunistic buying. We start with the chips trade and Stargate particularly since my next guest claims it helps address one very crucial question in the AI buildup. Before the sector begins to show a profit on all this investment, will there be sufficient money available to keep increasing capex? Based on Stargate, he argues the response is indeed yes. Allow us to introduce Chris Casso from Wolf Research. Chris, glad you could make it here. And listen, many seem really sure that there will be a payoff, or else I doubt they would be pumping in hundreds of billions of dollars. Indeed, it is precisely accurate. And, the argument you are making is valid. If you go back a year ago, most certainly 2 years ago, the data we were looking at for Nvidia specifically, the primary concern of investors is, where is this money coming from? Someone is using this money? One of the things this statement is stating is yes, businesses, especially these ones here, are ready to make investments ahead of the return on investment since they believe the ROI over the next 5 or 10 years would be so great. Still, Chris, if we could sort of back up for a second more generally, you sort of go into the specifics of Stargate, and a lot of this was already under development. Initially documented in March, this was a Microsoft OpenAI supercomputer alliance. Indeed, perhaps now there are 10 data centers, or 20. And now SoftBank is participating, and ARM, and that's all well and good. Though ARM's is maybe due of its kind of younger involvement, why do you think the stocks are reacting the way they are? Is this reaction logical and sustainable? Some of these equities had lately pulled back more gently. Over Nvidia, some have questions over the change of the new product ramp at Blackwell. Comparatively, how strong is that first half against the second? We see a transition period during which the second half should be far stronger. For Micron, one of our preferred names, for instance, some of the main business, such as handsets and PCs, has been in a cyclical decline. Once you reach the end of that, we believe the stock begins to respond to what is happening in artificial intelligence. The simple response to that question is that some of these equities have been under pressure for certain transient reasons. Clearly, then, over the next few years, people return to what the true prize is. Was that Qualcomm, you asked? In what otherwise quite hot area would some of the names you believe could be the next movers? Indeed, Micron is our preferred in the space right now, since it has been a body favorite. And considering the cyclical aspect of the company, correcting since some of the inventory corrections that have occurred find a very nice position in artificial intelligence. They handle the HBM memory destined for an artificial intelligence application. For them it's a new business. I believe the driver will be really competent. Though everyone loves Nvidia right now, we believe it will be the long-term winner. And we also enjoy Marvell, which is one of the businesses implementing customized silicon. For some of these firms there is uncertainty around the extent of the market that will be merchant silicon, for the general market like what Nvidia produces, and how much of it is going to be customized. Indeed, no, and Marvell is up huge, but if they stand to gain significantly, their market capitalization is far lower. Chris, if you would kindly stand by, we actually have a news alert on Qualcomm. Christina, divided parts Nouvelles told with that narrative. Christina is, well, we have all new worldwide Samsung phone models that now only run Qualcomm chips. This actually increases the cooperation Qualcomm already enjoys with Samsung, their main Android client. Furthermore, this is a significant change in Samsung's approach, as earlier on it made use of both in-house processors and Qualcomm chips. They revealed this only last year. The new versions will now use just Qualcomm's newest Snapdragon 8 Elite CPU, which will enable, we know, on-device artificial intelligence capability. Indeed, Apple iPhones now feature competing AI capacity as well. Further praised as, on their chips, the quickest mobile system available worldwide. You may thus run complex models such as Gemini straight on the phone. Though everyone employs a hybrid model right now, you don't really need a relationship to the cloud. And at a time when Samsung has been trying to close the disparity in worldwide smartphone market share, This truly is relevant. IDC studies showing Apple as the world market leader, Samsung somewhat closely behind. Conflicting studies claiming Samsung is number one also abound. That results in neck and neck. More recently though, evidence showing Apple is gradually losing market share in China to local names like Huawei. Pre-orders also opened today with a release date of February 7th, as Samsung's attempts to persuade American consumers from Apple intensify ramp up. The main lesson here is that all Samsung phones will be running the new ones, using Qualcomm chips, which indicates they are not employing their own in-house ones. It could also grasp Christina's point of view that Samsung's semiconductor development presents current difficulties, more so with its foundry operations, and you were only discussing high bandwidth memory. Samsung thus serves as a supplier. Just this morning, a story surfaced from South Korea, indicating Samsung's intention to reduce capex expenditure, especially pertaining to its foundry operations. Thus, when reading an article such as this about Qualcomm, I wonder who would gain. Given its relationship with Qualcomm, TSMC will gain even if Samsung's foundry company is not employing their in-house CPUs. There are several players there, all related, but when discussing foundry business, Samsung and TSMC are the major ones. All good, thank you. On this, Qualcomm shares are riding a somewhat higher leg higher, up 2.5%. Christina thanks, Christina Partnavelis. Still with us is Chris Casso of Wolf. Chris, would you augment the relevance of what you just heard? Yes, and it's something fortunately I can talk about since we have discussed it already, but if you go back in the last generation, around 2 years ago, Qualcomm did supply practically all of the CPUs for Samsung phones. The 24, their share declined to almost 75% during the past year, the final generation. And the key reason the share is rising is Samsung's own struggle with obtaining their leading-edge production. Their foundry company performs on par with TSMC. They have so been grappling there. After that, Qualcomm benefits since they grab those sockets and subsequently runs those processors at TSMC. It is hence a driver. You know their percentage of the 24 this year is roughly 75%, and you know it sounds like that's getting higher. I wanted to make sure you had that news if there is a negative sentiment around anything going into megacap next week. Apple is just what else is it? Google making a fresh investment of more than $1 billion by the way in Anthropic that is, according to the FT. Everybody else's price goal rises, Reafera, Kickstarter, performs better than say Endeavor, etc. etc. Barclay today reminds us they perform poorly. Actually, yesterday we had 2 downgrades on the stock. One last week or a few weeks ago was what we had. Real questions regarding iPhone demand in this upgrade cycle seem to exist. Consequently, nobody owns the stock on the desk today. Kevin Simpson lately purchased more of it nevertheless. He comes around right now to discuss that more. You thus bought it now, since you believe the sell-off in the shares to be exaggerated. Here is the narrative. Indeed, if you recall, we left our post in mid-December at about $242. Then of course, by Christmas it was almost $260. Since, why wouldn't it be? Is the selling over under, Scott? I disagree. We actually considered a nice reaccumulation phase anywhere between $200 and $230. We therefore acquired up few shares at $230 on Thursday. We paid $220 yesterday and bought a bit more. We'll see here in the $220s and all the way down to $200. I'm not sure whether we ever get the exact bottoms or tops. He says, keep gathering the position, and my thesis on it is really traditional. We ignore the share buybacks quite a bit. We treat it as taken for granted. For share buybacks this year, they announced $110 billion back in May though, and what that does is it greatly increases earnings per share. Their development might thus be 11% this year, 12% next year, more of a service model than a utility type thing. Still another critique directed against it. But when you look at the cloud and Apple Music, when you look at the App Store and the revenue stream, you're talking about $110 billion of free cash flow. Though that would be dull, that is the kind of dull we enjoy. What then is the criticism about? Well, the Apple Intelligence rollout has been somewhat of a bust, and their hardware innovation is lacking. Still, I don't think they oversold it or overhyped it. One thing we do know about Apple is that whenever they perfect something, the public are drawn to it finally. We would thus see it for the iPhone 17 should we miss a supercycle for the Apple 16. This stock is hated by everyone. That is, when we purchase it. We sell something when everyone loves it. Given the volatility on this company, I also feel somewhat optimistic that we will be able to produce a lot of call premiums since the quarter should disappoint. Still, we are looking well beyond that.